Good morning, everyone. Welcome again. We are starting our ChatTP session. So I would like to make a brief introduction about some news that we have come up with for our ChatTP group, and also tell you about what we are planning for today's session. So first, about the news, we want to create a community environment. So not only have these monthly sessions, but also have other things that we can use to connect and uh, learn more, discuss more about TP in between these sessions. So instead of having our discussion 1 month and then not seeing each other till the next month, we want to boost this communication, try to get everyone engaged in order for this discussion to be even richer. So for now, we already made 2 actions. The first, we made a drive for which the link is pinned here in the chat box. In this drive, for now, we have uploaded the cases from the previous sessions, but we want to use these to also publish other materials, and everyone is welcome to join and to contribute to it. So to use these as an exchange box for ideas and materials. The other thing is a community on LinkedIn, so that everyone can join and be up to date with the news regarding our group, and we can use these to discuss several topics, post questions and discuss it, and it will also help us to prepare for the other sessions. So getting a sense on what's really concerning the companies and professionals. So we hope that these actions will contribute to enlarge our project and help everyone. So today we will have.
Can
Yes?
I add something?
Yes, please.
Everyone, hello. We understand that the process of the implementation of TP in Brazil has been the OECD TP model in Brazil has been hard. People are confused. Then the idea is having a space where we can share our doubts and also our answers. So we would like you to join the community. The link is already on the chat, okay? So it would be really nice if you could join there, and then we can keep in touch during the whole month. And in the same way, we are also trying to share materials about TP. So as Flavio told, we have now a drive, and also the link is in the chat. So please feel free to join the group, the community, and to save the drive. And then if you have materials that might be interesting for everyone, we could share through the drive. Okay, Flavio, please.
Thank you. And then, well, for today's session, we will have a different dynamic. Professor Hans is not joining us today. So instead of discussing the cases, we brought Robert Vries here with us. He's a very experienced professional. And the reason why we asked Robert to join us is that because we sensed that the participants of our group had a lot of questions regarding practical aspects of TP, and Robert is, maybe one of the best professionals that could help us, get more grip of that. He has been part of several projects for more than 20 years of experience in the TP field. So it's really a privilege to have him here with us today. So the idea is for him to presentation on the topic, but as always, we want these to be a discussion. So we really encourage you to participate. Do not hold back your doubts, any questions that you have. You can use the chat box. You can raise your hand and open your camera, your mic. Feel free, uh, as use whatever means you want. But we really encourage you to participate. Pilar?
Yes. Yes, Robert is really experienced, and as we saw in the last section, people are still a little bit confused about the operational side of the TP, and that is Robert's expertise. So he's going to really help us today. Besides that, if someone doesn't feel comfortable to ask any question in English, maybe you feel you understand, but you don't feel comfortable to speak in English, feel free to write in English or in Portuguese, and then we can translate to Robert, okay? Don't be shy if you're not used to speak in English. I know that quite often we learn English at school, we know how to read, we understand what other people say, but when we have to really speak, especially about technical subjects, it can be really hard. So please don't feel shy. You can speak in English and make the mistake, and it's okay, or you can ask in Portuguese and we will help you in this process, okay? Robert, it's your time to talk with us.
Well, my big thanks for the introduction. So really good to hear. And indeed, almost 27, 28 years now. So time is really flying. No, so I've been indeed involved in transfer pricing for 25 years. I have been working for multinationals in different countries, in North America, throughout Europe, and also in Asia. And that has always been from the company side, so deep understanding of the transfer pricing rules from the OECD, but also the specific applicable rules in the countries. And that is what I can translate to any situation that companies are facing. So it is indeed, I will be telling about master file, local file, and the economic analysis. But I think most important is if you have any questions, feel free to ask, because what I would love to see is an interactive session. So if there are so far no questions, then I will be sharing my screen and start with the presentation. So as mentioned, what I would like to discuss really in short, the arm's length principle, why we have the transfer pricing documentation and taking the next step towards the economic analysis, let's say the benchmark study. So when we really start with the compliance model and really make sure that you will never be fully compliant, but it's always about reducing the risk for non-compliance. That is what we do with these two visuals. So when I start on the right side, we have the transfer pricing cycle. So when you are starting with transfer pricing, you first start with the strategy. And what I mean with that, to investigate if you have intercompany transactions present. So that is what you can do to find out what you have been invoicing towards related entities. Most important, of course, is also to take a look at what you haven't been invoicing. So what in practice I see quite a lot is that companies are providing services to related entities. For example, management fee. We have that legal person who is drafting the contract for the related entity because they do not have the knowledge. However, they will not send an invoice for that. When we look at financial transactions, I have, let's say, adapt to related companies, but it's short term, but for over a year. Hey, it's becoming long term. It will become interest bearing. It is becoming an in-company transaction. So really making sure that you have fully in scope, what is our group, what are the intercompany transactions that are there, and what are the intercompany transactions that I am expecting. Then the next step is you're going to look at the transfer pricing documentation, master file, local files, and looking at the local rules and regulations. When do I need to draft the local file? What are the thresholds? Do I need to have specifics in the file that are required by those local rules and regulations? Also make sure that it reconciles, but I will come back to that. Then really the fun part starts, the benchmark studies. So that is really based on what we have in the local files, in the files itself, where we are going to look at any study of any intercompany transactions, what we have, and how can we determine the at arm's length, so the market price between the related entities.
Robert, the first word you told us while explaining this slide, it was about strategy. Yes. Can you talk a little bit more about the place of strategy while dealing with compliance and invoicing and etc.? How would you manage that with a company? Okay, the company arrives and okay, we wanna to fill our documentation, our TP documentation. We are planning our reports, and then we have to set our strategy. How would you talk with this company? What kind of questions you would made, just to make this a little bit more less abstract, and then people can understand how it works in everyday life.
Yeah, of course. So when we look at transfer pricing strategy, and it sounds, let's say, if it is a really big thing, it is important that transfer pricing is following the business, so that we do not draft transfer pricing documentation and we say, hey, we need to change our business processes. So it's really about understanding the business, seeing how transfer pricing can be implemented in these processes, being really a big part of your tax control framework. So making sure that it is implemented within the organization, and thinking about optimization. So we can draft documentation, but that can be really hard to maintain. That can be really challenging to be compliant. What I mean with that, challenging to make sure that you are invoicing the correct amount at the correct time. So it's really thinking about aligning with your business strategy. You have your tax control framework, you have your transfer pricing strategy to really look at, hey, what works best, and do we still minimize the risk of non-compliance? It's making a blueprint. It is drafting a framework for transfer pricing, and then we are talking about the entities, the intercompany transactions, the value, the tested parties, and really implementing that into the organization so that it becomes really part of that organization. I hope that explains it a little bit more.
Yes, yes, indeed. It helped. Thank you. Hello, someone I know arrived. I'm excited. Hello, Paulo. Go, Robert, please.
Yeah, so then we have already discussed the transfer pricing documentation, the benchmark studies, then implement. And what I mean with implement, we have the theoretical part, we have the documentation, we have the benchmark study. So, hey, we know what we should be making as a result. So, for example, I have production and that is selling towards a sales company, then you can be really happy. Hey, we determined that the production should have a markup on their cost of 10%. Really nice. How are you going to make sure that you implement that into your organization? That you make sure that any products are indeed sold with a markup of 10%. And that is with implement that you are looking at processes. How do I ensure that every invoice is charged at the right cost? But also, how do I ensure that we include the correct cost? So should it be purely manufacturing? Should it include overhead, or should it include the complete operating profit, or let's say the operating cost?
I have another question. Sorry, Robert. After
Okay.
this section, you are going to complain. In the next event you participate, you are going to say, please don't make questions until I finish my presentation. I'm a really annoying person when I'm in an event and etc. So I am a company, I work in a company, and okay, I'm starting to deal with the OECD model this year. And I'm scared. When do you think this process should happen? How you manage the process considering the declarations, because you have the proper time to fill the documentation. You would start talking about that months before the declaration. You together with the month you should be doing the declaration, because it looks like a process that has to be following the business. Are you going to do that for a year? How companies manage the time issue?
When we look at that, I've learned in those 27 years that transfer pricing is never priority one within a company. So we know that most financial departments, tax departments, they will be really busy with month-end close, with budget, with year-end close. So with budget, year-end close, it is never a good time to start with transfer pricing because it's really labor intensive. When the year has ended, you are a little bit too late because probably only 3-4 months after the year you can start. And then you need to be thinking about, hey, how did I do it during that year? And hey, the markup is different as what we thought. So normally what you would do is that you start during the year already with the transfer pricing documentation. You can draft the documentation. You need to be sure that you already have in really good sight what the pricing should be. Then at the end of the year, you need an update. But I see that Flavio has a question.
Yes. So regarding the same topic, as you mentioned, it's something that is usually left to be done later, and that was especially the case in Brazil with our previous legislation. Pretty much once in the following year, when you were doing your income tax obligations, then companies would calculate their transfer price, see if they had any adjustments, and it's very important to understand this shift, how the new rules require companies to start their studies as soon as possible. But to add on that, and I would love to hear your comments, is to see how it is important that several departments of the companies be involved in this process. It's not just a tax department issue, right? So this is a challenge for these to comply with the TP rules. So if you could explore a little bit on that, it would be great.
Yeah, because what we see in the OECD is that you really want to have your correct pricing ready Q1, Q2 of the year in scope. Reasoning why is that any year-end transfer pricing adjustment, so making sure that you land on the at arm's length, will require you to send an adjustment invoice. That has its impact on VAT, but it will also draw the attention from the tax authority because they see a year-end adjustment of you as a multinational enterprise not being in control. When we look at the company, it is indeed not only finance and tax, it is the complete management layer within a company. From the group, so meaning the C-suite, management at the group, but also management at the local entities. We had a really nice case. Tax authorities, they were discussing with the group, hey, the functionalities of, let's say, the group, your local entities. So at group, they were talking about, hey, all the decisions are made on this level. We determine everything. We determine the strategy, the pricing, how we purchase, when we purchase. Now, tax officer said, hey, really nice. Do you allow me to talk to a person at a local entity? They allowed. They talked to the production manager. And of course, he thinks he's really important and really thinks, hey, I'm going to tell him a really nice story. No, hey, I'm going to determine everything myself. I can order machines. I can determine if I go to supplier A or B, and even determine if I want to have a high stock, have a low stock. Then you have a big issue. Why? Because we are in the transfer pricing documentation, we are making a classification of the company itself, of all entities. Is it a revenue center? Is it a profit center? Is it a limited risk distributor? Is it fully fledged? So if on one hand, I'm drafting documentation, having a story, and if on the other hand, the local team is telling a different story, I have a non-compliance. I have a risk. And that is why you need to include all management levels from group, from the local entities, and have really supporting documentation present. So when we look at supporting documentation, best example is Germany. You have the transfer pricing documentation. If the tax administration will pay you a visit, they request to have insight in your email, in your meeting minutes, in your WhatsApp, in all your social media, meaning they will use everything to check if what is in the documentation is accurate or not. And then if not, then you will have a nice problem on your hand.
So, Robert, in the best scenario, you should start your TP strategy months ahead and plan that with your business somehow, like relating to your business. But in the real scenario, what happens is everything happens and then people are trying to fill the documentation following the business.
Yes, and that is why most of the times I am never calling me a consultant, but a project manager. It is always about making sure that the company is aware of. You start most of the times with determining a schedule. What should be done when and when should it be finished? Then I will be the nice person who keeps on calling, who's sending emails, who is planning Teams meetings to ensure that we take those steps. So when we look at the chart, TP strategy should start in Q1. Reconciliation should end in Q4. And then the year starts over and we start again with a TP strategy. However, it is more an update.
Yes, it really helped. So guys, someone else has questions about this. I think it was really helpful how Robert explained how it happens in real life, but maybe someone has another question, or we can let him give his presentation.
Then I will start with the next view. There we see shaking hands. And what I mean with that is we need to have alignment between the documentation, between the contracts in place, and between the factual circumstances. Documentations we just discussed. Contracts, that is always an issue. Most of the times they are not present. A nice case in southern part of Europe between Portugal and Spain. The holding company was sending management fee invoices to the related company in Spain. However, didn't have a contract in place. Spanish tax authority paid a visit to the local entity in Spain and told that they could not deduct the management fee in their P&L. Reasoning, there is no contract, so there is no obligation to accept those costs. Issue what you have then is a higher profit in Spain, so a higher taxable amount, and still a high profit in Portugal because you've sent that invoice. Pilar.
Okay, again, Robert. Guys, I think from a Brazilian perspective, that's really interesting to hear. Really, 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 really interesting to hear, because when you read the regulation and the law, there it's like that. The formal contract is the first step to see if you have operation that should be under the TP rules. But in fact, many times when you are working with multinationals, you don't have the contract. But you don't have the formal contract because you have a material contract, an agreement, something that's relatable. But the tax authorities can look that and say, you don't have a contract, so I'm not going to allow you to deduct that. So I think it was a really interesting case, Robert, to see the difference between what's written in law and what really happens in real life when tax authorities are interpreting the legislation. But we have another question here.
Yeah, so I will give you one more example, important one regarding the contracts. Then I will follow up on that question. So looking at a contract, it should be there. Keep in mind, a contract of one page is not a contract. Contracts need to have substance. So they need to describe what is the service or the products provided. What are the liabilities? Where do the risks lie? What is the remuneration? What are the payment terms? What I also see in practice that the CEO of the holding has the director's function in the related entity. From a legal perspective, it is not really strong that the same person is signing the contract as a CEO of the group and as managing director of the company, the related company itself. So always have different person sign it. Always make sure that the contract reflects the factual situation. So if there are no questions about this topic, I will answer the question itself.
Yes, there is another question. Okay, so we can go to controversy, but not the case today. So you arrived at a company and then the documentation doesn't reflect the real business.
That means that the documentation will not be accepted. That means that the tax authority can think of pricing themselves, and probably that will not be favorable.
Then you are managing the risk, right? then you are going to deal with the risk, like, okay.
No, it is more what we currently see, that a lot of tax authorities, they are protecting their tax base. So they need funding. Transfer pricing is really a nice cash cow. So meaning if you have transfer pricing that is not of a high standard, they can say, and that is a really the practice that I've seen in the last month, is that they make a proposal. Oh, you should be increasing your profit in country Brazil with 10 million. You are not allowed to reduce your profit in the US, so you get a double taxation. So really important to have proper documentation in place.
Yes. We have a consideration or a question, I'm not sure, from Alison in the chat. He said, or she said, sorry, Alison, I'm not sure. If it's possible to talk about the impact on prices between related companies, the study should really start as soon as possible.
That's just one commentary, Pilar, because the idea is you are talking about, for example, how it can impact our business here in Brazil. It should be started as soon as possible, because I have seen here in my contacts, my clients, they are not so aware about how it's important in their business. That's the point. I think it's very important to mention. We don't need to wait for the end of the year. It starts in the beginning of the year. This because again, if everyone agree to impact their business, their price between one commercial relationship, it's very important to start in the beginning of the year. That's there's no comment here.
It is indeed really important to start at the beginning of the year, because if I would only start, for example, in June, that would mean that I need to adjust pricing for the first 6 months.
Yeah, because our situation here in Brazil, Robert, is the most of the company, they don't care about it during the year.
Yeah.
When we arrive there in the December, January, February, they wait for some advice or something like that. But during the year, they don't care about it.
No, but then I discovered that the culture in Brazil does not really differ that much from the culture in Europe. Most companies also during the year do not care. They think, oh, it is a compliance exercise. We just start at the end of the year between the financial statement and the corporate tax.
Yeah, in here, Brazil, you are looking for some, let's say, we need to convince our clients, our colleagues, to start this study in the beginning of the year. That's why for us it's a very challenge, because our let's say real life here in Brazil is to think about this in the end of the year. So we are looking for words, some example from abroad, for example, to bring us more, let's say, more case that we need to be aware how it can impact their business or something like that. That's the challenge for us here in Brazil.
Just let me add something. Also, it's our first year, right? Somehow, TP, the TP model. And with the fixed margins, it was much easier to fill the documentation. So we are in a process of a cultural change. So I think after this process, we will still have some problems, as Robert is addressing, that we have in Europe. But in Brazil, maybe now it's even harder because we didn't have this problem.
Yeah, I agree. It makes sense.
We didn't have, and people really, maybe people cannot see how that might affect, how it can raise the risk in terms of some adjustment from the tax authorities. So I think in 2 years, when we start having the tax authorities visiting companies and etc., it will be another process. But for right now, it doesn't sound like a real problem, but it will be a real problem, as Robert just gave us many different examples. Robert, please, I think you're thinking about saying something.
Yes, and indeed thinking about, because companies normally only tend to take some steps in compliance if they suspect that they are at the risk of a high cash out. With transfer pricing, if, let's say, I'm thinking, well, there is not really the necessity to do something, because what is the chance that I will be checked? Then year 1, you do nothing. Year 2, you will do nothing. Year 3, you start to think about it. Year 4, oh, you see quite some audits, so I'm going to improve. Tax authorities, they look back. Then you probably have for about 3 years that you will have a profit adjustment, you need to pay interest, and you need to pay a fine. So I think it is really about creating that awareness that it can and will have a big impact. It is about having sessions about explaining to multinationals what does it mean, what are the risks, how do we need to mitigate those risks. And it's not that difficult, but we need to take some steps.
I do agree. Okay, Robert, I think you can go on.
So looking at the transfer pricing documentation itself, it is about providing, or let's say, taking the reader by hand through the documentation. So the documentation itself is for providing the substance or the reasoning why you are using those intercompany prices between the related entities. So again, looking at, I have a master file, I have a local file. It would be a really good thing if both are aligned, that they are telling the same story. But in the end, if my benchmark study is really deviating, because most companies, they think, hey, I want to charge a markup of 10%, and the benchmark study can maybe show, hey, I need to do a resale minus, or I have a markup of 15%. I've been asked numerous times, can you tweak the benchmark study? To a certain extent, yes, you can, but you cannot go from markup of 16% to 10%. Then we see, for example, you have a manufacturing company that is producing car parts. They have a benchmark study that contains comparable companies that are baking cookies. Will that hold stand when you are in discussion with a tax authority? Can be, but probably not. Meaning all the documentation needs to be aligned. Also, you don't want to provide more information than required, also not less. You need to find the balance between making sure that the questions that are being asked are as limited as possible.
Robert, can you give an example about this? This idea that you have to be straightforward on your answers.
No, it is, you need to be, you need to make sure that the story that you are telling, that is correct. So if in a master file, I am stating, hey, we have a group that consists of manufacturing and limited risk distributors. In the local file, we are telling this company is a selling entity, but it's fully fledged because it has all the risk. And in practice, I'm telling, yeah, they really don't do that much. It is all about, it needs to be aligned. You need to tell the same story, and that needs to run throughout the complete documentation. And of course, needs to be aligned with how you are actually working. I've been working for a company where I was performing process mining. And that is really a lot of fun because people are telling me, yeah, when I receive an invoice, then I will do these checks. I enter it in the system, and that will go to a person who can approve. Then we have a three-way matching. But when you look into the system, what you see there, that it provides a completely different view. So when I'm going into your ERP system with some smart tooling, I can see all the processes. I can see all the errors made. I can see the workarounds. Tax authorities, they are really getting smarter. Because I've been talking to a company really smart in machine learning, and quite some tax authorities are buying that software. So always make sure that what you tell, you can prove.
Perfect.
And then I hope you have really good eyes.
Perfect. But I'm sorry, I have to add this, but I'm quite sure that some Brazilian companies are going to invent some documentation after the business is done. How do you feel about that, Flavio? I can see some companies saying, "Oh
Yes.
no, I think that this is too much for me, or I need to go in another way, and then I'm going to create some agreements after." Let's see, to create a strategy that's not totally aligned with the real business. I can see that happening. I don't know, maybe multinationals will be harder, but I can see this happening. I don't know how people feel about that, Brazilians, how Flavio and other Brazilian people in the audience, how they feel about that.
Yeah, it's a real possibility. People try to get creative, but it's really important to what Robert's saying. To know better than that, understand that the tax authorities will not accept anything. You have to have consistency. So I think that's a good alert.
I do agree. Robert, go on, please.
Yeah, because to add to that, it is, let's say from my experience, I can, for every company, I can make a list that is for 90% accurate about the intercompany transactions that should be there. Meaning the tax authority can also do, if you tell me as a company that those transactions are not there, then I'm starting to get really interested. Tax authority will do the same. And that's also really to think about. You do not want the tax authority to do a deep dive.
Mhm.
So we also need to make sure that we do not get too scared about transfer pricing. I still think it's a really fun topic. And I got a really great remark from a really big bank where I did the documentation for. He is using the transfer pricing documentation for the new hires so that they can get a good understanding how the business works. So it's also not really a booklet that you put in your drawer, but also that you can use for other purposes. So the master file, quite some information, or what you can see, a really long list, but it's more about describing the group. You have a strategy. What are your global competitors? What is your global presence? What is your value proposition? So that shouldn't be that hard. Don't make sure not to copy the information on your website. That's a little bit too far. Let's say a little bit too sales. So it's really about describing factual the group. making sure that you can align that with any supporting documentation. We need to add as an appendix the financial statement, balance sheet, and P&L. As an appendix, we will include contracts, loan agreements. So really make sure that you have those present. Make sure that you update your contracts when factual circumstances change, that you update your interest rate on a yearly basis because maybe the rating of a company changes. So I will not go into too much detail on this perspective. If you would like me, then let me know. And it's good to see that nobody likes me to do that. And this part is really what I like the most, the value chain analysis. So what you see is the Porter value chain describing the primary and secondary activities. Secondary activities they are supporting. Primary activities are what is providing the income, providing the sales. But then we see different sizes, different order. So what would you expect is the most important function here? Given the size, it is sales. We have engineering, it is important, but not that important as procurement. We start with procurement, then we go to the process, and it ends in marketing and sales. So how would you classify this company? It's not about really where, hey, I'm Apple, I'm making products and they will sell themselves, or that I'm like Tesla, hey, I do not need to make any commercial. It's about a company that is investing quite a lot in marketing and sales and is using maybe influencers to sell the product. Maybe not that good, but still people want to have it.
Robert, I think that's a really nice example. And I think it's visual, right? You try to make what's bigger in the company and smaller about how big it is in the representation, right?
Yeah.
Yeah. But besides that, I think it's a really nice example to show to our audience, our community, about the relationship between the law and the economic view when you are dealing with TP. To understand the core business, you have to kind of list everything a company does and then try to find the profile of that company. For example, all companies must sell because it's part of their business. But why this company, not only about the visual part, but why do you say that this company main business is the sales and not the engineer or the production?
Yeah, when we look from that perspective, so what we can look at, we can say it is sales is really big, but we look at a group. So it can also be that we have a separate procurement entity and one entity that is doing an engineering, production, quality control, and supply chain, and we can have separate sales entities. Here we define what are the contributors to the value and adding part. So when it is big, it adds quite a lot. But it's also, we need to draw or perform a value chain analysis for, let's say, the mainstreams within a company. So we can have a company that is building hardware for computers and also software. Those are really two different types of products/services. So in that case, you need to draft two of these value chain analysis.
Perfect.
This part also defines which company is or which part is driving the most profit, and that also defines again, hey, what should be taxed where.
Yes, please go on explaining. I think you could explain a little bit more about the value chain analysis, how it connects with the legislation. I mean, it can be about the Dutch legislation, the European legislation, but why you have to organize information this way to fill the reports, the local file, the master file, and also to be able to calculate the payments to that you have to make, and also the methods.
So when we look at the value chain analysis, it is really the basis for determining the prices used between the related entities. So if you want to understand how the company works, so how the multinational company works, what you want, you need to understand the supply chain, you need to understand the value chain. If you have a good understanding of that part, you can have a really good understanding also of the classification of the companies and also the related in the company transactions. If we are talking about, we have, let's say here, those entities. We have, this is one company, this is one company. Or we maybe say we have four companies here that are different. This value chain is showing that most result is generated by marketing and sales. So in practice, I would also expect that that entity would have a large part of the profit.
This could also help in the comparability analysis, right?
This is the basis. So the comparability analysis is where we are looking at which companies can I use to determine the at arm's length pricing, so the market price. We're going to look at the value chain, looking at the functions performed, the risk assumed, and the assets used. So it's all about including those topics.
Perfect, thank you.
And then, of course, we also know that we make mistakes. What we see quite a lot is that documentation is prepared too late. Every country will have its own deadlines. In the Netherlands, you need to have your documentations ready before you submit your corporate income tax return. In other countries, you need to have it ready within 6 weeks after year end. Some countries, you need to also file the transfer pricing documentation. For example, Italy is really strict. You need to submit it. Also, the CEO or the C-suite of the companies, they need to sign the documentation. If you not do it in that way, you will never go to Italy on a holiday again, because you will be imprisoned. Financials not reconciling. How can you be sure that, because you include in the transfer pricing documentation the intercompany sales that you have had? Does that reconcile with your local GL? Does it reconcile with your financial statement? Does it reconcile with your corporate income tax return? Those are what I've seen probably the most challenging issues. Then intercompany transaction not complete. I've already mentioned that you will always have intercompany positions between related entities. So I see accounts receivable, accounts payable. And during the year, there will be around a certain amount. But if they remain on that certain amount for over a year, they will change from short-term to long-term they become interest bearing, and you need to determine a market rate for that intercompany loan, as classification will be. Not reconciling with other information sources. I think that's already what we discussed quite intensively. Limited substantiation. That's what I see a lot. Yeah, we charge a fee, and we do that according to the market price. Always explain the why. Why do you think it is at market price? Why do you charge it? Is there a reasoning for charging? Information not aligned with local files is what we have discussed, and also text not aligned. I've read through documentation of the Big Four. That's always a lot of fun. On one page, they mentioned an intercompany transaction that has a markup of 8%. On the next page, they mentioned the same intercompany transaction that was using the transactional net margin method with a 3% margin. How can it be that in 2 pages you are telling a different story? So really make sure that the documentation throughout is telling the same story, because that will help you minimize the risk on the non-compliance. Local file. There we will go into more detail, looking at the local entity itself. So as a stakeholder, in this case, most of the times, tax authority, they want to understand local strategy, local organization, how is the market, what are the functions performed, how our competitors, how we stand against our competitors. And the next step, of course, is that we are going to perform the functional analysis, the economic analysis. And there we go into a really deep dive where we'll be talking per intercompany transaction about functions performed, the risk that are assumed, who is bearing the risk, who is performing the functions, and that is the basis also for the next step, the economic analysis. And then we are really starting with a database, and we want to end with comparable companies that will show us what they are doing with third party. So then we can determine the market price. Pilar.
Robert used to like me, but after these presentations, he's going to hate me forever. But anyhow, guys, we intend to have another meeting where Robert's going to go further on the functional analysis and also about the benchmark. Because I know we are running out of time. So now we are going to have this general view about that, how it works. But we are quite sure people will suffer about this part, functional analysis, and how to make comparables and the benchmark. So if you are feeling like, okay, too much information now, don't be worried. We are going to get back on this in a future TP session, okay? Sorry, Robert, just because I'm quite sure that some people are like, okay, now it's going too fast and I'm getting a little bit lost, just to make everyone feel comfortable about the process.
Fully understandable.
So yes, your time again, sorry.
Now, I think also when we look at timing, it is what I want to still provide some information about the economic analysis / benchmark study. So why I was talking about local file, master file, because it is really setting the stage for the benchmark study. And when looking at that benchmark study, what we want to do is that, hey, we are performing services for a related entity, and we need to charge that at a market price. Why? Because we want to avoid profit shifting and avoid the risk on non-compliance, taxes and fines. So we can do that in a different way. The really nice part is if you are performing the same services to a third party, hey, I already have a market price. Are the functions the same? Are the risks the same? Yes, perfect. Are the functions not really the same? I can still use that external pricing, but I need to make a comparability adjustment. So for example, I have a product or let's say a service of offering that I'm performing to a third party, but that includes the full scope. But the service that I'm offering to my related party is just having the limited scope, so the value adding is lower. What I need to do is what is the impact on the price of the difference in service? And for example, maybe that is 10%, then a comparability adjustment is 10%. Then I'm at a market price. So that is really the simple part. I can also look at, hey, competitors, what are they doing? What are they charging? If I have 10 competitors and I know that, again, it is quite on the same line with functions, risks, and assets, then I can still use that pricing. But of course, that is not really fun. So we want to make it a little bit more challenging. So we go into a database. We're going to look at 34 million companies, or in Brazil, a little bit less, but the databases are really growing, and we already have quite a lot of companies in the database that we are using. So we start with a really big set, where some people will say, hey, we're just going to use that outcome. Well, not, because that would mean that we also include auto shops, bakeries, and more. So with the Boolean search, so more or less with the filtering, we are going to narrow down the large number of companies to a couple of hundreds, where we say those companies we are going to really check. We're going to check the website. Do they really provide the same services as we are doing? Hey, yes, they are doing. Hey, then I have a comparable company. And so we are running through those companies to ensure that we have a number of comparable companies, not one, not two, not three, because that would mean we are doing some cherry picking. But we need to have a couple of 20s that are comparable, and we can say, hey, now we can determine the at arm's length pricing. Then to give you a little bit more headache, what is the transfer pricing method that we will be using? What is the profit level indicator? But to keep it really simple, that is a technical part. I would advise you to do it, to not do it yourself. Ask any advisor. But this part is really the most important for your transfer pricing documentation. In practice, I see that maybe 0.5% of the companies is performing the benchmark studies themselves. If you do not perform them themselves, what my advice is, make sure that you understand them. Do you understand every step that is taking? Do you think that the comparable companies are actually comparable? Because you know your business, the advisor, probably not. So it is always a cooperation between the company itself and the advisor. Advisor from the legal part, let's say from the local rules and regulations, the company from the business itself. And Pilar, I'm waiting on a hand from your side.
Yes. Guys, we felt in our last sections that you were really anxious to see how to make a a benchmark, how to find the comparables. And I'm really happy that Robert brought this slide for us that shows that technology is helping us to search for the comparables, but we still need humans, right? Thanks God. Artificial intelligence not stealing all our jobs, because it helps. You can do kind of you identify the profile of your business, and then you select what helps to find a closer business to yours. But in the end, you still have to have a human being trying to understand, okay, this is really comparable, because sometimes business look the same, but they have some specificity that demands some adjustments, not exactly the same. And then you have the possible comparability adjustment to make, like, okay, these companies sells this thing, it's quite similar, quite the same function analysis and risks, but not exactly. And then you must try to adjust a little bit further. But yes, I think this slide was really special for everybody here trying to understand, because it shows us how to really search for comparables, and how to actually to justify why a company is comparable to another company. But what another thing that's interesting is that you only can use the system, the software, when you already understood the business, because then is the way to find for it's when you are able to find a real comparable. Thank you, Robert. I will say thank you many times, but this one was special.
Thanks. And it's also, yes, you need software to do that. You can, of course, buy a database and do it yourself in Excel. I would not recommend it. When looking at the next step, so what are shortcomings? Benchmark studies, we need to update them yearly. That is not the complete work, but that is that we say, for example, if we perform a benchmark study now, we will almost be able to use 2023 data, 2022 and 2021. But when we are in 2025, we want to use, or we need to use also the 2024 numbers. Because if profitability in the market really increased, that is also what we should reflect in our intercompany pricing. Test party. What does it mean? The party that we are going to test, the party that is the most simple to test. If we take a complex party to test, that means that the risk that something is going wrong is higher. So we try to keep it simple. We always, or at least that is what I'm saying, we need to make sure that a toddler of 3 or 4 years old can understand the documentation, because then we know that we have enough substantiation in the documentation itself. When I'm looking at transfer pricing methods, so if I have highly integrated business, so medical, where one is engineering, one is developing, so can we then use a cost plus? Probably not. We need to use a resale minus. We need to understand exactly how it is interrelated. NACE code, that's more or less a company classification. That is what we use to determine the first filtering. I'm going to look at just producers of car companies, or let's say of cars. If I'm including producers of machines, then probably that will have an impact on my outcome. Comparability adjustment is what you do if the comparable companies are not really that equal, because you think you have a unique proposition towards the market means, hey, what is a difference and how are you going to value that difference? So can you put an amount on the difference? But that is, of course, not what you should be doing all by yourself. You have specialists who can help you there. And also, when looking at automation, I think it can really help people. Doing transfer pricing fully manual is quite burdensome. I have been drafting documentation, I think it was 10 years ago, working for a multinational entity, rather small, 20 entities outside of Europe. And I had to draft a documentation in Word. That really drove me crazy, costing me really a lot of time. So what you want to do is have software that is helping you to standardize, to automate, let's say, the basic work, saving you time, helping you with the quality of the documentation. And that is more about making sure that you have software that is helping you to be compliant, saving you time, because in the end, we are all busy with quite some work. So it can be an idea that I will show some solutions the next time, how they can help.
Yes, Robert. And I think besides that, besides saving time, besides considering how much work everybody has today, it's impossible to a human being to address so many variables together. We don't have a database. We don't have a memory as the artificial intelligence might have. We have more critical points of view. We can check what's there, but it's kind of impossible to keep so many information and cross this information with our brains. It's a miracle, human brains, but they don't work as any artificial intelligence. So yes, we need some help when dealing with this. Again, Robert, please.
Yeah, so indeed, from that perspective, in transfer pricing, what is the most important? To spend quite some time on the preparation itself, so on the strategy itself. Think about what do we need to include in the documentation. Think about what kind of intercompany transactions do we have? Are these meeting the threshold? What are the specific circumstances? So it's more about having a good understanding of the business and the impact on your tax, on your transfer pricing, and make sure that you are using people who like it or software that can do the work itself. And
Yes.
then we can start a big discussion.
I think it was really, really, really helpful to understand the details of the practical, operational, everyday life with TP, and I'm quite sure people felt the same because it was supposed to have finished 20 minutes ago, and almost everyone was right here until now. Now we are losing people. People don't want to listen to me say, thank you, Robert. It was so nice. And I also think you also had the interaction you were looking for, Robert. Maybe not from me, maybe more from the audience. But anyhow, Brazilians can be a little bit shy when dealing with English. But I think it was quite interesting and really helped. Flavio, do you want to add something?
Thanks. No, I would just like to thank Robert again. It was really great, very enriching presentation, and I'm looking forward to the next session in which you can explore more these practical details. But yeah, it was really great. I also would like to thank everyone that joined us today. And yeah, until next time. But now, as we mentioned at the beginning, we want to boost our communication in between the sessions. So please join our community on LinkedIn. We have here the link. Pilar also posted now, but we will also share by email, contact you in other ways so that you can join the discussion also in our community.
Yes, Robert, did you see you're already invited? Because Flavio already told that you are coming back to talk with us again about the subject. So,
No, that indeed, my thanks for that. I enjoyed it, but I think what also would be helpful is to hear some issues that you face, so that we can discuss that and also provide some solutions that help you.
Yeah, we can use our community to ask people to send these issues in advance, and then we can prepare a session to address those issues. I think it would be great.
okay, I think.
All right. Thank you, everyone. Until next time.
Thank you a
you,
lot,
Vries.
especially Robert. Thank you, Adriana, and everyone that's still here. And we hope to see you again and bring your colleagues to participate in the next event.
Okay, thank you.
Right. Bye-bye.
Bye.